Hey, what's happening, guys? Dan Darrow here with another options and play video update. So we are through a lot of earnings, and we had some really fantastic moves. A lot of stuff that didn't, a lot of stuff that didn't move, a lot of things that did move, right? Um, what I typically screen for during earnings season are setups where I feel like a stock is set up for a bigger than anticipated move, right? So I think the option pricing looks underpriced based off the potential. So I'm looking at volatility strategies, right? So that's like either like a long straddle, long strangle, something along those lines, right? Coming, well, going into last week, I thought Kronos, so the cannabis name, I thought it was set up well for volatility strategy, and in this case, we went with a strangle. And one of the reasons why is like I thought the option pricing was modest versus the fact that it'd been kind of like range bound for a while. So this was the stock going in. I've been range bound. Didn't really participate with other cannabis stocks, which had moved off the low pretty substantially, reclaimed like key levels. Seemed like it was like due for a move, and based off what the options were pricing, it seemed like it wasn't really reflected in the potential wasn't reflected in the pricing of those contracts, right? So I was looking at uh, uh, upside calls and downside puts, right? Now, on Friday, Kronos reported kind of mixed, probably more disappointing. Well, it definitely was more disappointing based off the reaction. And the stock, it's right here, it moved lower, but only modestly. So it didn't move as not enough. Well, it didn't move what the options were pricing in was first, and second, it didn't move enough to reward either side of the strangle. So it didn't drop enough in this case to reward the strangle, right? And I have a pretty specific rule when it comes to these types of trades, right? So if I'm in a strangle or a straddle, and the stock doesn't have a big enough move to either give me a shot to give back like 90 to 95% of the net debit on the first day. So like that's kind of like my threshold on the first day is like 90-ish. So that's the bar. So if I can get back 90% of the premium, then I'm probably looking to get out flat. If I can't get back 90%, so I mean there's obviously going to be trades that work and like that's a different story, but just the ones that don't move enough. So if I can't get back 90%, then my plan is I usually sit tight and I give it about 2 to 3 days. And what I've come to realize over trading a lot of these different patterns throughout the years is that stocks may not have a huge move on the day of their numbers, but they tend to find direction the 2 to 3 days after, right? So it's kind of like as the numbers get disseminated and people digest the news, then the money starts getting moved. The money starts moving around, and even though they don't have a big move the day of, they tend to get kind of follow through the next couple days, right? So I like to give them 2 to 3 days after if they don't have a big move on the first day. So Kronos, you can see 3 days, 3 days lower, breaking below five, and that kind of creates like a different issue, right? So the option, like the put in this case, still wasn't enough to reclaim, still wasn't enough to recover the entire net debit of the strangle, but you also have to weigh the risk reward at this point, right? Because the contracts are very short term and there's not a lot of wiggle room, right? I mean, a bounce from here is really going to take like a toll on those really short term contracts. So, um, the 3 days after, so after the numbers come out and 3 days have elapsed, then I'm looking to manage those contracts, and it is definitely something that um, I, you know, we'll say that there is like some wiggle room, like where you can say like if there's like 2, 3, 4 weeks left until expiration, you could possibly sit on it longer. But if you have short-term contracts, then you're looking to recover premium and move on to the next one, right? So sometimes you got to take the losses, take the lumps, and it's managing like the trades that don't work because that is equally as important as managing the trades that do work. All right, so like that's like my rule. 2 to 3 days post results. If it still hasn't found direction, recovering premium, salvaging premium. If it has started to find direction, then you got to weigh the time left until expiration versus the total premium. All right. So if you like these videos and you're looking for more information on earnings trading or options trading or options education too, please follow up with the link in the description of the video for more information on options to play. I hope you guys have a safe night, have a healthy night, and I will talk to you all tomorrow.